Hey everyone, welcome back to Corporate Decoder, the place where we dig through corporate filings so you don't have to. Today we're cracking open a proxy statement from SPAR Group, a company that specialises in retail merchandising services. Are they worth your investment? Well, let's just say some major changes are coming down the pipeline and it involves going private. Prepare for some boardroom drama, numbers, and the potential end of an era for this publicly traded company. Before we dive in, if you appreciate getting the straight story from these corporate reports, make sure you subscribe. Also join our Discord channel in the description below for even more discussions. So what's on the agenda for this annual meeting? Well, it's a pretty standard list: electing directors, ratifying the accounting firm, and voting on executive pay. But here's the kicker: this might be the last annual meeting as we know it. There's a big merger on the horizon, a potential going private transaction, meaning SPAR Group might not be publicly traded much longer. The big news here is the potential merger with Highwire Capital. Highwire wants to buy all the stock for $250 share, which totals about $58 million. This means Highwire would take SPAR Group private, the stock would disappear from the Nasdaq and things would change drastically. If the deal closes before the annual meeting in June, it might not even happen. Highwire would become the only stockholder and could just skip the whole meeting. The board seems to be in favour of the deal, recommending stockholders approve it. The merger agreement can be terminated if it doesn't close by the end of May of this year, so time is ticking. Now, who gets to vote on all this? Stockholders as of April 25th of this year are supposed to be the ones to cast their votes. But again, if the merger closes before the annual meeting, forget about it. Highwire will call all the shots. Let's talk about the people running the show, the board of directors. There are 7 nominees up for re-election. However, some of these are contractually dedicated seats. Basically, some major stockholders have a contractual right to nominate people to certain board seats. What does this mean? It essentially becomes an advisory vote, since these nominated people likely will get the board seats regardless of the actual vote. There's a fail-safe in place called a resignation letter. It means directors can be forced to retire if they don't comply with company policies, if their performance tanks, or if the nominating stockholder wants someone else in their seat. This retirement can happen if most of the voting stockholders vote no to them. Next up, we need to talk about the bean counters. The company wants to keep using BDO USA PC as their independent accounting firm. It's just an advisory vote so people can make their voices heard. How much are they paying BDO? For last year, the audit fees were about $782,000. If you add in audit-related fees and tax fees, it goes up to over $800,000. In the year before, the total was almost $1.2 million. So it seems as though there has been a decrease in cost, however, that's due to the previous firm having done tax compliance. Now for a hot topic, executive pay. The company wants stockholders to give a thumbs up or thumbs down on how they're paying their top executives. The goal is to attract and keep good talent, pay competitively, and reward success. They combine base salaries, bonuses, and stock-based awards. How does the company decide how much to pay executives? They look at individual performance, company performance, and overall goals. Bonuses are tied to specific targets. If those targets are met, the executives get paid. Here's a question of frequency. How often should the company ask stockholders about executive pay? Once every 1, 2, or 3 years. The board wants it every year because it's believed it's a good idea to keep a pulse on stockholder sentiment and executive pay. This is about the company's plan to give stock-based awards to employees, directors, and consultants. It's like giving them a piece of the company, hoping they will work harder. The main purpose of these plans is to make people work harder to pursue the company's growth and financial success over the long term. There are 2 million shares available under the plan. The awards usually vest or become available over a period of 1 to 3 years. If people retire, die, or become disabled, the awards vest fully, meaning they get them right away. Alright, let's check the team running the company. We've got Michael Matacunas as CEO, Antonio Callisto Pato as CFO, Corey Belzer as Global CEO Commercial Officer, and Ron Lutz as Global Chief Commercial Officer. Let's talk about corporate governance. The board is made up of independent and non-independent directors. A governance committee makes sure that the directors are independent enough from significant stockholders. There are committees for auditing, compensation, and governance. They oversee different parts of the company. The audit committee makes sure the financial reporting is accurate and that internal controls are in place. Basically, they are there to make sure the company isn't cooking the books. The compensation committee decides how much the executives get paid. It's also responsible for making sure the payment plans align with the success of the company, meaning that these executives are incentivized to do good, not just to rob. The governance committee nominates directors and makes sure the company is following its ethics code and policies. Here are some figures to chew on. First CEO, Michael Mitakunas, had a total compensation package worth $226 million last year. If you look at compensation actually paid, his figure jumps to 238%, meaning investors more than doubled their money. Net income was about $26 million and $28. Right around $580,000. This seems as though they are relatively similar across all positions. The big jump came from Mitakunas. Let's see what the company as a whole did. The total stockholder return was close to 58 at average compensation that was nearly identical between their total and actually paid amounts, right around $580,000. It seems as though they are relatively similar across all positions. The big jump came from Mitakunas. Let's see what the company as a whole did. The total stockholder return was close to 58 at average compensation that was nearly identical between their total and actually paid amounts. Right around $580,000, $2.6 million. Now we are talking. Here are some numbers for directors. William Bartels was paid $180,000 in compensation. He has some additional compensation that includes car and cell phone allowances. The other directors, John Bode, James Gillis, and Linda Houston, made $140,000, $165,000, and $45,000 respectively. Are there any shady deals going on? Well, the company has to disclose any transactions where there could be a conflict of interest. This is where things get interesting. The key thing to look for is that everything is done above board to not give special treatment. In this case, the CEO, Michael Mitakunas' wife, owns W Marketing, so this company has to disclose the fact that they did business. The company has put in place an ethics code to ensure that this doesn't happen. The ethics code is intended to promote and reward honest, ethical, respectful, and professional conduct by each director. Now, what's my take on all this? Well, on one hand, the numbers paint a picture of a company riding high in terms of stock performance, but potentially preparing for a new direction as it goes private. The potential merger with Highwire Capital is a game changer. It could mean the end of the line for public stockholders as they are traded out for the cash value per share. The strong stockholder return for this year would be awesome, but as the corporation gets sold, there's a risk that stock investments may be cut short. It's definitely a good time to be an executive as well as investors for the company as a result of their hard work. Alright, that's our breakdown of SPAR Group's latest proxy statement. What's your take on these numbers and this potential sale? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Also, don't forget to check out the Discord in the description. Thanks for watching. See you next time.